Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Dean Christians, who's the senior research analyst over at Sentimentrader. Now, this is our first meeting with Dean, and I'm so excited to have you here and to learn more about what you do and what Sentimentrader does as well. How are you?
I'm great, Blake. Thanks for having me on the show today.
It is so great to have you. And like I said, I've known for years Sentimentrader. I know they've been around for a long time, and I know a lot of people are very familiar with the name. So I'm excited to hear, like I said, what you do there for Sentimentrader, and also what Sentimentrader offers and how you guys do analysis in the markets. But before we get into that, I want to talk a little bit about you and get to know you a little bit and what your background is. Because if I'm a trader, I'm listening to you right now, I'm like, what's your street cred? So tell me a little bit, or tell us a little bit about yourself, Dean.
Sure. So, I was a finance major in college, and, senior year took a futures and options class, sort of got the investing bug.
Yeah.
After taking that class. And fortunately for me, I had some contacts with the Chicago Board of Trade. And when I graduated from college, I picked up and moved from, Atlanta, Georgia, where I was born and raised, and moved to Chicago and worked in the 30-year bond options pit. This was in the mid 1990s, back when the trading floors were very vibrant, still a lot of human bodies.
Yeah.
Electronic trading really wasn't on the scene yet, and that was an amazing experience as a 22, 23-year-old kid to go down on the floor, where it's kill or be killed every single day.
Yeah.
And guys are, look, if you don't make money that day, you're not eating dinner that night.
Right.
And that's where I really got my first sort of introduction to, to technical analysis. I really like to just call it market analysis, but most people call it technical analysis. And, the guys in the pits were using very simple things, floor pivots, point figure charts, stuff like that. But that's where I sort of caught the bug as well of market analysis. And after a few winters in Chicago, I decided to move back south. A little too chilly for me, and I was fortunate enough to get a junior trading position at a firm by the name of Montag and Caldwell, which was a large cap growth manager. And this was in the late 90s, when obviously growth stocks were on fire. You had the internet boom, and it was really a great opportunity for me. We had a sizable amount of assets under management, so we paid a lot of commissions out to the street, each year. And with that commission budget, we got access to a lot of research, and that's where I took my sort of technical market analysis research to the next level. And it was really awesome. I mean, I got to meet guys like Ralph Before when they came into the office, Jeff DeGraff, Luis Yamada, you name it. A lot of the really classical, old school technical analysts who were responsible for building up the CMT Association and or what was formerly called the MTA. And so that was just a wonderful opportunity. Obviously, day to day I was trading for the firm, but at night, weekends, whatever, I was also really building out my research capabilities, and that was really the only way you could kind of learn it. A lot of those wirehouse firms had technical research departments, but they slowly started to close them all down. And fortunately, I was able to make a lot of good contacts and look at a lot of different research. Another one was Ned Davis Research, who had a tremendous impact on me and the way I view the markets. Using that sort of quantitative analysis that's driven by the statistics, the historical statistics for trading signals. And so that really shaped me and what I am today in terms of a market analyst. The other big thing for me was I'm a self-taught coder. So probably 15 to 20 years ago, I got this piece of software called what is now called TradeStation. I can't remember what the former name was, but I learned what was called Easy Language, which is their programming. And that was also just a major turning point for me, was learning how to code.
So when you learned all this, in as you were at this big fund and growth company fund, but how did that translate to your time where you're at right now at Sentimentrader?
Yeah, so look, a lot of the analysis that I've done is breadth based and signal driven. Removing emotion from the trades, and that really aligns with what Jason has done for a very long time now. And in fact, I was a former subscriber of Jason's a long time ago. And when I started to talk to Jason, last year about coming on board, one of the first things Jason said was like, I really like your work, and it aligns with what we do here, which is that signal driven, emotionless driven analysis, where we take a study and review it, put all the signals into a little spreadsheet that then pops out what the performance is days later or months later, and so it's that signal driven, sort of like, here's what the market has done historically, and this is what it should do on a go-forward basis. That may not be the case all the time,
of course.
But that so Jason and I had a lot of similarities in the way that we were analyzing the market. Now Jason, obviously is the authority on sentiment analysis, and then I did use sentiment, but I predominantly, my analysis was breadth based, and of course Jason was, already doing that to a large degree. But when I came on board, it was just another natural fit with the firm in terms of the way I analyze markets and the way that Sentimentrader was already analyzing the market.
Well, that's pretty cool. So what I'd love to see from you, Dean, is I want to learn what Sentimentrader does a little bit. And I'm sure the trading community at large, they're probably a lot like me. If they don't know Sentimentrader, they're familiar with the name, love all the social media posts that Jason and your team do. And I'd love to see what's on your radar right now, especially as we're, heading into this market where we've got the Fed that might start accelerating their tapering based on some, higher inflation data that might be released tomorrow. I'd love to see what your take is on the market and certain stocks and certain sectors. So show us what you got.
Sure. Okay, I'm gonna share the screen here.
Sure thing.
And then what we'll do is we've got the website here, so hopefully you can see that okay.
Absolutely.
And again, just to give you a little bit of information, again, we've got multiple tiers of subscribers. We've got basic and premium subscribers, and myself and Jay Capel and Jason all publish notes to the premium subscribers, and Jason predominantly will do premium and basic. And we've got a website, so on the website, you can go and see, all of the data, signals, charts, bells and whistles that we provide to subscribers. One thing, when we send out tweets on social media, obviously that's just a little headline tweet. There's obviously a lot more behind that, and it's just a little bit of a tease. So, we would encourage people, if you want to see more of the research that we're doing, we offer a 30-day free trial. So, sign up for that 30-day free trial, and you'll get a good understanding of what we're doing on a daily basis and the data that we provide. We've got a subscriber base that's that's predominantly retail, but we also offer institutions the same research, and so we've got a pretty diverse group of subscribers that we cater to. And on a daily basis, the three of us are constantly publishing research when we find that there's something worthy of posting. And again, it's that data-driven signal analysis with the statistics backed up behind it that we feel like provides us with a differentiated view. I mean, if you look at I subscribe to research services for the last 20 years. I was on Wall Street for 20 years, and it amazes me how you see so much stuff out there where people don't put the statistics behind the signal. They just put a chart out there with some lines on it. And, we're really, really about giving people the information that they need so that they can make an informed decision. And again, we are just an extension of what people are doing on a day-to-day basis in terms of their own research. Hopefully we can provide them with a little bit of an edge that tilts the scales for them so they can make, an informed decision. So this is our website. And again, we're actually in the process of rebuilding the website, which, subscribers will see some new changes come, January or February. But you can see over here, like our latest commentary here on the left side. And, so this morning I put out a note to subscribers talking about a thrust signal that we just saw occur yesterday as of the close. And Jason put out a note yesterday also with a volume-based thrust signal. So two thrust signals that are, very bullish for the market. And if we come in here and we pull up this note, again, this will show subscribers or potential subscribers, what we're going to provide. And again, what we want to do is give people the quick bullet points and the statistics behind the signal. So for instance, as of the close yesterday, we got a breadth thrust signal. The percentage of S&P 500 members trading above their 10-day moving average reversed from a state of being oversold to overbought in 5 days. And historically, that's a very bullish signal. When you see these upward thrusts, especially in a very short period of time, that's extremely bullish for the market. I
hate to interject here, but a lot of people think, it's overbought, or you're getting an overbought signal, so that's not necessarily bullish. I shouldn't be buying up here, but that's not always the case, right, Dean?
Right. So there's two kinds of overboughts, right? There's overbought bad and there's overbought good. And this is an overbought good signal, meaning that there's momentum behind it and you're breaking out stocks, more stocks are participating. Typically a bad overbought, right, occurs in a trading range or in a downtrend. But when you're in an uptrend, right, when the market moves back to a state of being overbought, and especially when it does it in a very brief period of time where you come down, you're oversold, you reverse higher, and you're overbought, that's a good overbought. So yeah, there's the RSI. It drives me crazy because I see these tweets by all these people who say, "Oh, well, the market's overbought." Well, look, I've done analysis where I have systems where you buy the market when RSI crosses above 70. That's going into what you deem as a bull range. So when it crosses above 70 and then stays above 30 for a significant amount of time, that's bullish overbought. So there's a lot of things out there when it comes to market analysis where people haven't done the work behind the scenes. They don't understand the signal and the statistics behind it, and they make these comments. And usually Jason, Jay, myself, we're all just sort of chuckling, like, hey, have you looked at a table like this? So here's our table for this breadth thrust signal, and you can see how we list out all the signals since 1929, and then we provide the statistics behind it, and you can see the number of instances where it's positive and median gains, your Z-score, all that. And you can see after this signal occurs, 2 months later, the market's higher 85% of the time with a median gain of 2.7%. That's a pretty good stat. So, look, overbought can be good. Everyone needs to remember that. But again, this is a note that, typically you'll see from us. We really recently have tried to keep our notes more brief and succinct and to the point where, look, we want to say, here's our key bullet points, here's the statistics, here's a chart so you understand what the indicator is doing, and then, here's what the research tells us. And, in today's day and age, people, are getting so much information, especially, with, as we all know, with social media today. You're getting a million things thrown at you. You've got 10, 20, 30, 40 different research providers maybe that you're looking at. And it's really important to keep text to a minimum, right? And really have those big bullet points that are backed up by the statistics. And that's what we do at Sentimentrader is whether it's stocks or commodities or bonds, we're constantly looking for historical patterns that we can show our subscribers, hey, look, when this has occurred in the past, here's what's likely to happen on a go-forward basis. And that's sort of our bread and butter everyday, research that we're providing to our subscribers. Now, again, we've got a lot of different types of subscribers. So a lot of the subscribers, like in the hedge fund world, we're providing data to them. They're taking that data in and then they're doing whatever analysis that they want with it. We also provide a backtest engine, which we're working on right now on an upgrade, which I think, a lot of people, they know we have it, but they just don't know how powerful it is. And so, we'll look here at some of the, my favorites that I've got going here. So backtest, if you come to tools and you go to backtest engine, this is a great backtest engine. You can select whatever security you want, whether it's S&P or the NASDAQ 100. You can choose an indicator, and then you can run backtests on it. I'm going to just quickly go down to one of my favorites here, which happens to be something that is very timely here. We have a risk appetite index that Jason built years ago. It takes in risk appetite indexes from 3 various banks and combines it into one single indicator. And what we saw was the risk appetite index moved down to a level that it hasn't been in a long time, meaning that people were reducing risk here in this most recent correction. And if we look at the chart here, Blake, you can see that when we look at all instances where the risk index was down sub 3%, you see these little red dots here. I mean, you can see that it hasn't happened very, very often here since we got the data started in 1998. And this is just one little simple back test that you can run. But when you run that back test, what you can see is a 100% win rate, and I believe I have it set to 3 months later. Let me check that real quick. Yeah, so got it days, and yeah, it's 3 months later. You can quickly see, when this indicator crosses below 3.5%. The stock market or S&P is up 100% of the time 3 months later. And if you could click on your multiple time frames and see here that what happens after 1 week, 2 weeks, 3 weeks, 3 months later. And again, here you see that 3 months later that the market. So what has happened is, right, everyone got bearish. Okay, they took risk off in this latest dip down. And typically when that happens, we see prices revert back up, and that's exactly what we've seen here in the last 3 or 4 days. And if we go back to that note, that I published this morning, again, we had this big reversal and participation. Jason posted a note yesterday looking at up volume, the 10-day as a percentage of up plus down on a 10-day smoothing basis has gotten down to a very oversold level. And then 3 out of the last 4 days, we saw where 80% of the volume went into advancing stops on the NYSE. That historically is a very bullish signal. So we've had this big risk off period, and now we're starting to see that turn, and we're seeing risk on signals come into the marketplace. So that should be good. As you said, look, we've got one little hiccup that I call hiccup that we have to deal with here, which is the Fed meeting coming up. I think that's next week, right?
Yep.
So the Fed, it wouldn't surprise me. Maybe the Fed makes a comment and we see some backing and filling in the market. We had been, a little bit cautious ahead of this last dip. We'd seen participation in the marketplace really start to tail off if you look at, sort of breadth composites, you saw breadth peak back in May. And then you had sort of that September, October swing, and we rallied to new highs and started to consolidate. And then breadth started to flash some signals that, hey, things aren't as strong under the surface as it seems when you look at index price. We know, I think I saw a statistic the other day that, year to date, some crazy amount of the S&P return is related to 4 stocks like, Microsoft, Apple, and 2 other stocks. So, under the surface, things haven't been great here, really since May. And really that's a reflection of 2 things, inflation spiking. That inflation spike caused interest rates to start to rise, now interest rates lately have fallen off and been sort of range bound. But when you typically see that, you start to see groups falter, whether, perfect examples, interest rates started to rise while home builders started to weaken. So, again, we're based upon the evidence as of right now, we're constructive on the market. You've had this risk off phase, and now we're starting to see better participation and risk on measures coming to the market. Could the Fed stall us a little bit here in December? Sure. But from a big picture perspective, we haven't seen anything that suggests, a bear market is imminent or even really a large correction is imminent.
Yeah.
Yes, valuations are stretched, but they can be stretched for a long time.
Yeah. The market could be overbought, but it could get always over more boughter.
Sure. Yeah. No,
but looking at your statistics here, Dean, I think it's interesting. 1 month later, based on this, this sampling that you're running, 1 month later, 73%, 2 months later, 82%, 3 months later, 100% of the time, the market's higher. And that, that gives a lot of probably pause for people that are thinking, hey, maybe the market's top, maybe we're going to see a top in the first quarter of 2022. So, you start looking at data like this, and, that might give you a little bit more caution as you approach the first quarter of this next year. And Dean, I find what you guys do at Sentimentrader very exciting. I love how it's data driven. I love how you have the evidence to back it up. So how do I find out more about what you do, Dean, and what you guys do at Sentimentrader? How do I find out about you guys?
Sure. So you can, the best place really, again, is just to go to the website, and you can learn a lot there. We also have, videos that, you can learn about our service. Again, I would, personally would sign up for, free 30-day trial. I think that's sort of the best way to sort of learn about what we do. And you'll get a good idea of the research that we're publishing. And again, all that research is on the website, so you can quickly go in there and learn about, what we're writing about on a daily basis. You can also, if you come to our research tab, say you said, oh, well, look, I want to go see what Jason has been, writing about over the last few weeks. You can click on Jason's research and quickly pull up Jason's notes here and sort of learn about what he's been writing about. Same thing with, myself or Jay. You can quickly come in here and quickly see. And again, this gives you sort of that breadcrumb trail that you can see that, oh, okay, well, Dean was writing cautious notes, about 3 or 4 weeks ago. The market started to correct, and now the market has resumed its uptrend, and we're seeing thrust signals. So you get that breadcrumb trail. We also make forecasts. So, and that's provided on the website. So, what you can see, like today on my note, my thrust note, I put a forecast on there for the S&P. And we'll put a time frame on it: short term, medium term, long term. And you can go in on the website and see all those forecasts. And again, you can see that sort of breadcrumb trail of, hey, Sentimentrader got cautious here, and now they're getting more bullish here. And so we provide that. We think that's a really important thing for subscribers, to be able to see, is that, hey, yes, we're making forecasts, and hey, are those forecasts accurate? And That to me is really important when you're providing service.
No, that's great. And Dean, I'll tell you, I want to thank you for your time today and really taking us through Sentimentrader and what you do there. And I hope that the next time that we get to meet, maybe at the early 2022, we can see some of your forecasts going into 2022 and how you're feeling about the markets at that point in time.
Yeah, sure. That would be great. And Blake, look, I really appreciate you having me on today and enjoyed our conversation. And hopefully we'll talk soon.
Well, it was nice having you, and I want to wish you a very happy holiday season. And thank you so much for being with us today. And I'll look forward to speaking with you again in 2022. Thanks again, Dean.
Super. Thank you, Blake.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.